Welcome back, money minded legends. Today we're talking about one of the biggest life hacks no one teaches you in school: how to invest as a teenager. Even if you're broke, starting from zero, or think you're too young to begin. If you start now, your future self is going to thank you. So if you're 13 to 19 years old, pay attention because starting early gives you an advantage adults can never get back. Let's get into it. If you're under 18, to start investing, you usually need a custodial account. This is an investing account your parent or guardian helps you open. Use a brokerage platform such as Vanguard, Robinhood, Schwab, or other investing app that support under 18 users. I like Vanguard because they are easy to use and have low fees. The adult acts as the custodian, managing the account until the teen reaches the age of majority, usually 18 or 21, depending on the country or state, at which point full ownership transfers to the young investor. Opening the account typically requires basic personal details, identification for the custodian and teen, and linking a bank account for deposits. Once set up, the teen can begin investing in stocks, exchange-traded funds, and index funds, gaining early exposure to long-term wealth building while learning the fundamentals of smart financial habits. Learn the basics of investing. Investing simply means your money makes money. Here are 4 core things investors need to understand. Stock investments involve buying shares of a company, which makes you a partial owner of that business. As the company grows and becomes more valuable, your shares can increase in value, allowing you to earn money through price gains and sometimes dividends. Stock prices can go up or down. ETF and index fund investments pool money from many investors to buy a wide range of stocks or assets, giving you instant diversification in a single purchase. Instead of picking individual companies, these funds track a market index, like the S&P 500, making them low cost, low effort, and ideal for long-term investing. Warren Buffett has repeatedly said that the best investment for most people is a low-cost S&P 500 index fund. This is a great place to start when building an investment portfolio. Compounding in investing means your money earns returns, and then those returns begin earning additional returns over time, causing your wealth to grow faster the longer you invest. It's like a snowball rolling downhill. Small contributions made early can grow into a large amount simply by giving them time to compound. Risk versus reward in investing means that the potential for higher returns usually comes with a higher chance of losing money. Safer investments tend to offer lower returns, while riskier investments can deliver bigger gains but with more volatility. The key is finding a balance that matches your goals, timeline, and comfort with market ups and downs. Once you understand these 4 ideas, you're already ahead of 90% of teens and many adults. Your income is your biggest wealth building tool. Teenagers can generate income by taking on part-time jobs, offering services like babysitting, tutoring, pet sitting, lawn care, or starting small online businesses, such as selling items on marketplaces or creating digital products. Even simple side hustles like car washing or shoveling driveways can help you build income to save and invest. Don't be too picky for your first job. The skills developed and experience gained at this stage will help you going forward. The money earned from this job will be used to invest and build wealth. Don't blow it on video games or the latest tech. Get your driver's license as early as possible. It gives you a powerful sense of independence, responsibility, and freedom that helps you grow into a capable young adult. Being able to drive makes it easier to get to work, school, sports, and social activities without relying on parents or public transport, opening up more opportunities for income, education, and personal growth. It also teaches important life skills like time management, safety awareness, and decision making. Being able to drive is an important life skill that is crucial for generating income. Teens should consider university because it can open doors to higher paying careers, specialized skills, and long term opportunities that are harder to access without a degree. Beyond academics, university provides valuable experiences like networking, building friendships, exploring interests, and developing independence. It also exposes teens to new environments and perspectives that help them grow personally and professionally. While it's not the right path for everyone, university can significantly increase future earning potential and create a strong foundation for a successful and fulfilling career. Teens should invest consistently because starting early allows your money to grow for decades through the power of compound interest, turning even small, regular contributions into significant wealth over time. By investing a little each week or month, you build disciplined habits that set you up for financial stability and confidence as adults. Consistent investing also helps teens ride out market ups and downs, reducing risk and smoothing long-term returns. The earlier you begin, the more time your money has to multiply, making consistent investing one of the smartest financial decisions a young person can make. Time is your secret weapon. Let's say you invest $100 a month starting at age 16. If you average a 10% return, which is what the S&P 500 has done historically, by age 60, you could have about $780,000. If you start at age 26 with the same amount, you'd have less than half of that. This is the power of starting young. Starting right now is more important than how much you start with. Most beginner investors, especially teens, make these mistakes, trying to get rich quick. You don't need to double your money overnight. Slow growth wins. Don't worry about next week's price. Think long term. Following hype or TikTok experts. If someone promises guaranteed returns, run. Investing money you'll need soon. Investing is for long-term growth, not next month's purchases. Stopping when the market drops. When prices fall, it's a sale. Stay consistent. Avoid these mistakes and you'll be far ahead of most adults. So that's how to invest as a teenager. Start early, open an account today, learn the basics, generate income, pick simple long-term investments such as an S&P 500 index fund, and stay consistent. If you found this video helpful, please like and subscribe for more money tips. Thanks for watching. Until next time, keep earning, keep saving, and keep investing.